Good morning and welcome to Morning Markets. Today we're going to focus on softer US economic data and why politics do matter for markets. Yesterday, investors were predominantly focused on the economic data that was coming from the manufacturing side. The US was in focus, where we had the survey data which gives us a good understanding and timely understanding of the health of the US manufacturing sector. Now, these are survey results, so they often can be a little bit misleading to what actually comes through in the hard realized data, but nonetheless important for investors. The data suggested that the manufacturing sector remains softer than initially expected. What we saw was overall activity contracted for a second consecutive month, and when we look at the subcomponents, it's really the new orders sector that saw a significant decline, the largest drop in over 2 years, and that's reflective that demand perhaps is a little bit cooler than initially thought. When we look at prices, they remained elevated, although they did come down, but it suggests that the underlying inflation pressures within the sector persist. On a more positive note, the employment component remains healthy and is expanding, which suggests that companies are still hiring, which should be supportive for broader economic activity. However, with the overall demand picture weaker, companies appear to be reluctant to invest, particularly with interest rates at where they are at 5.5%. So the manufacturing data is part of a broader trend that we've been seeing in more recent weeks, where US economic activity has been not as strong as consensus estimates. And what we're seeing is in the more timely economic growth forecasts for the second quarter is that's been revised down. So if we go back a month ago, 4% annualized growth for the US economy was expected. Now it's down to only 2%. So still healthy, but not as strong as what initially was thought. How did markets react? Well, we saw a bit of strength within US government bonds as bond yields fell, as they had to adjust their interest rate expectations, and we saw stock prices still deliver positive returns, particularly in large cap tech. However, those more economically sensitive sectors and small caps actually struggled. Now, away from the US and away from economic data, politics actually is in focus for markets, and around the world this year we'll be having multiple elections. Over 50 countries will be holding elections. Right now we've had Mexico, India and South Africa. In Mexico, actually the reaction has been negative in their domestic stock market, falling over 10% yesterday in US dollar terms. The election results was as expected in terms of the candidate. Claudia Sheinbaum would be the first elected female president. However, what wasn't expected by the polls was the majority. She'll gain a 2/3 majority, which will give her the ability to change or amend the constitution and give her the power to make material changes and consequential changes as well. So a negative reaction there. In India, we've also seen the current Prime Minister be re-elected as expected, but this time he will not get the majority that they initially thought, which perhaps challenges his ability to maintain the current strength of economic growth. So it's just a reminder that politics do matter for markets, and it's often that when the polls are slightly different to the actual result, then the markets have to recalibrate quite quickly. That's everything from us today. Thank you for watching, and we'll see you tomorrow.